welcome to our webinar that is presented by RJ Sanderson and put on by the kind people at City of Whittlesea. My name is Kat and I'm joined today with Roy Sanderson.
Morning, Kat. How are you?
I'm good, thank you. Roy, how are you?
Yeah, travelling very well. For those listening, we are self-isolating. I'm in one of my offices at Berwick. I think Kat might be at the South Marine or the Epping office or at home, but we're in different locations, which is a tribute to modern technology that we can do this.
It definitely is. So Roy will be taking you through the presentation today and we'll be holding some Q&A at the end. So here's a picture of us, just in case you aren't familiar. So Roy's the director at RJ Sanderson, and I am work with Roy, and I look after the cloud technology, and also am an accountant as well. Take it away, Roy.
There's pictures there of Beauty and the Beast, and despite Photoshop, I still look the way I am. Thanks, Kat. We will kick it off. I just mentioned that this is a general advice disclaimer. I normally skip over this really quickly. A lot of this, as we go through today, you will see it's very general, it's overview, specific information to your business or your circumstances. We're not getting into the specifics. That doesn't mean we don't want to. If you're a client, email us. If you're not a client, we'll take emails. We're not charging to answer questions. So if we get to a topic and you go, I need more information specific to you, we'll handle that offline as a question at the end or by an email at the throughout the next couple of days.
Perfect. Thanks, Roy. Just a quick one as well. There is a Q&A box that you can submit your questions to. Please submit it through Q&A, not through chat, and we will get to them at the end of the session.
Terrific. All right. We will be taking questions at the end. If you have questions throughout, raise them, but we'll hopefully cover off most of the things that we want to talk about today should be covered off in this presentation. And as you read through that first slide, we are covering federal and state benefits, and I'll talk a little bit about City of Whittlesea right near the end. But that's a list of there's 14 topics there we're going to talk about. And as you scan your eyes over those topics, you think, yes, I knew about that one, I knew about that one. I'm hoping there's one or two in there you'll go, I didn't know about that one. And we'll cover off on that. And maybe there'll be things you know about, but you're not quite sure of eligibility, and we'll drill into some eligibility on most of those schemes. So that gives you an overview on what we're going to go through today. I won't read out all those, but we'll go on to the first topic, which is the cash flow stimulus boost for employers. There were two boosts announced, but in summary, these relate to when you lodge your March 2020 business activity statement. We know that BASs, or business activity statements, consist generally of three items. It's GST, it's pay-as-you-go withholding. Withholding is the tax on your staff wages, and possibly pay-as-you-go instalment. Now, this benefit relates to the pay-as-you-go withholding. If you employ staff, then whatever that withholding figure is paid for or waived or covered by the ATO. So the government cover that, and the minimum is $10,000. So if you have somebody on wages of only $500 with no tax, you get a minimum of $10,000. Then when you do your next two BASs, you'll get another $5,000 minimum, and $5,000 minimum June and $5,000 in September. So the minimum over two of these, if you employ people on wages, is $20,000. The maximum, if you have lots of people on wages, the maximum is $100,000. This is all about having that middle component, pay-as-you-go withholding, waived or paid by the government. The eligibility is 50 million. The process to apply for those is relatively easy, but there are integrity measures. You just can't turn around and say, I'm going to say I employ people on wages. You must have already been registered. It must have been it must be on your BAS. The ATO had prior year BASs. So there is a process to go through. Now, your BAS may have already been lodged. You may already have this benefit, and that's all great. Your deadline to lodge the BAS is the 26th of June. And if you're entitled to this benefit, and maybe you're getting the minimum, which means you don't have a lot of wages, but you're going to get $10,000 back. That $10,000 we paid to you back into your bank account. You'll physically get that. They will not offset it against any existing Australian Taxation Office debts either. You'll physically get that. So the idea is if you're struggling financially at the moment and you haven't done your BAS, jump onto your accountant, get the BAS lodged, or email me and we'll see what we can do to assist so that you can get that cash flow benefit into your bank account as quickly as possible. So this boost applies to not only the March one that you've lodged or about to lodge, but also the June BAS and the September BAS. Okay, Kat, we'll go on to the next one. There is a cash flow boost for employers that employ apprentices, and you get a 50% wage subsidy. So if you decide tomorrow to go out and employ an apprentice, then what will happen is 50% of the wages all the way through from tomorrow through to September will be rebated back to you. The maximum is $21,000 and it only applies for people who employ less than 20 staff members. If you have already been employing an apprentice, your first subsidy should have already been paid to you because the Apprenticeship Commission have started processing payments. They're doing it in steps, monthly payments. So if you haven't got that and you employ an apprentice, it means it might not be, the registration process might not have happened correctly. So you should consider going off and speaking to the registration people who you've employed the apprentice through to make sure that's all under control. The next one, which is a tax deferral. Now, this is the ability when you lodge your March BAS and you might have a debt for March. So you've got your GST, you've got your pay-as-you-go withholding, the middle component that I just spoke about a moment ago, but you also may have that third component, which is the instalment, where you are paying a percentage towards your next tax bill. So a percentage of tax, an amount of money towards your 30th of June 2020 tax bill. Now you're able to waive that completely to nil, vary it to nil, so you don't have to pay it. And that's because the ATO are predicting that profits will drop, and they're not asking you to substantiate it. But if your profits don't drop and they're maintaining the same level, when you lodge your 2020 tax return, you may end up with a tax bill because you haven't paid the instalments. So this is not about avoiding tax. This is very much about delaying the payment out of your bank account while things are cash tight. And the other points here are that the tax office will waive any penalties and interest that were incurred since the 23rd of January, which is fantastic. And when you do have a debt, if you have a debt for that March BAS, you can actually contact the tax office on the number I've supplied there on the screen, which allows you to extend the payment of that business activity statement through to the middle of September. And I've written in there low interest. In actual fact, it's going to be no interest at all. So you can get 4 months without paying that BAS with no interest. But you do need to tell the tax office that the reason you need that extension is because your turnover is affected by COVID-19. If you don't mention COVID-19 or the coronavirus, you don't get the extension. So when you ring the tax office on that number, they're waiting for you to say the reason. They'll ask, what's the reason you want the extension? If you just say, had a bad week, my wife left me, my equipment broke down, and if you haven't mentioned COVID-19, you won't get it. So you either do it yourself or ring the accountant who will do it for you, because we know what we need to say to get the tick boxes ticked. And after you've got that extension to middle of September, if you are still cash tight, as long as you ring before the due date, the tax office have made it very clear that they will put you onto a payment plan if you request it at a very low interest rate or no interest rate, because we're not quite sure of that yet. We'll need to wait till we get to September. And they'll let you pay off that debt over a 2-year period. So again, a cash flow delay, and the tax office are trying to help businesses so that they're not going broke. So that's tax deferral is worth considering. This is the instant asset write-off. Now, this allows us to spend money of up to $150,000 up to the 30th of June, as long as the item is ready to use. Now, that might be a car. Trouble with cars, the car limit isn't $150,000. There's a limit of it's around $67,000. So if you're going to buy a car between now and 30th of June, firstly, it must be business related. So don't go and buy a Porsche, that won't count. If you're buying a van or a ute, it will count. But check with the accountant first that you're under the limit. But you can claim the whole lot as a tax deduction. Now, I want to be clear here. A tax deduction, let's say you spend $50,000 on a new ute, and you're very happy you got the new ute. It's a tax deduction in full, but that doesn't mean the tax office give you $50,000. What it means is that you will save tax at whatever your tax rate is. Let's say your tax rate is 30%, then you'll save 30% of $50,000, not the whole $50,000. Also, if you're not making a profit, then it's likely you don't need that tax deduction because you're making a loss. So any losses will carry forward into next year. My message here, don't go and buy that piece of equipment, that furniture or the fit out or the computer or the car, unless you really need it. Don't waste money on tax deductions if you don't really need it. After 30th of June, there will be an accelerated depreciation where you can claim up to 50% of the depreciation rather than the full amount. But that will only be for new items and it's not second hand. And I've emphasised there, it's a tax incentive, it's not physical cash back incentive, like it was when I spoke about the stimulus cash booth on slide 1. Thanks, Kat. The government have introduced government-backed loans of up to $250,000. Now, if you're in business, you can actually get this loan through any bank. It doesn't have to be your normal banker. They will put you on relatively low interest rates. And on memory, I think they're close to 4%. They'll put you on a 3-year term, but for the first 6 months, you don't have to pay any interest on it. It's not interest free. The interest accumulates. So at the end of 6 months, you borrowed $250,000, but you're probably going to owe $255,000. You don't need to put up security like your home or your car or whatever. They're taking it as unsecured. It's a really good benefit and it gives you cash flow. I've been talking to a number of businesses here about the ability to have the business borrow the money because you might have money owed to you out of the business. You can then pay that back to the money owed to you and reduce any private debt, maybe on the home loan, that's not tax deductible. But keep in mind, a home loan often is over 25 years. This year will be over a 3-year term where you're paying back the loan over 3 years. So just got to do some cash planning to see if you do want this or do need this. It's a fantastic initiative by the government, and I'm not playing politics here. This was something that they created. It's innovative. They went to the banking system and said, we will guarantee 50% of the loan. And it means that the bank is unlikely to be out of pocket, even if they lend a business money and the business goes broke. So you still need to go through the normal application process, but I won't say it's automatic approval, but it's very close to automatic approval. Thanks, Kat. Payroll tax. What's happened here, and probably the bottom of the slide is the eligibility, because you can read the top of the slide and say, oh, this is awesome, I pay payroll tax. This only applies if your payroll, and payroll includes wages and superannuation, and it includes grouping. So if you have more than one company, you've got to group them together, and they need to be under $3 million. But if your payroll is under $3 million, you basically will get a refund for any payroll tax paid between July and March, and there's no payroll tax payable in the last quarter. This is not a delay. This is not a deferral. This is a fair income. This tax is being waived. You'll never have to pay it if you fit that criteria. Now, there is a website you can go to apply for this if the State Revenue Office have not been in touch with you. If you need that contact, if you email me, and I'll give it out at the end again, but it's roy@rjsanderson.com.au, and I'll send you the link to the State Revenue Office, which I should have put on the slide. but it's a very long link that will allow you to fill out some information, and if you haven't got your refund, then apply for it. And it all comes down to your estimate that your wages will be under $3 million. If you get to the end of the year and they're not under $3 million and you've got your money back, you will be paying it back to the State Revenue Office. So make sure you're eligible first. And that's where your accountant comes on board to check and do a forecast so that you are comfortable it's the right thing to apply for. The next one is Job Seeker. Now, Job Seeker, this is not JobKeeper, they are different things. Job Seeker is New Start or unemployment benefits. So the government doubled the amount. They gave you an extra $550 per fortnight, because I think right now people are on Job Seeker, not because they want to be, because they have to be. And they've nearly doubled the threshold for the partner. So you can get Job Seeker even if the partner's earning up to $79,000, and there's no income test. And it applies, the extra $550 applied to all those categories on what you might have been getting. You might have been a single parent or youth allowance, partner payment, etc. So the government, give them credit, they doubled that amount. And if you're unemployed, then you can go and apply for Job Seeker. But the next one is JobKeeper. Now, Seeker means looking for employment. Keeper means I'm keeping my employee. And this is $1,500 per eligible employee. Now that's a little bit more than the Job Seeker, so it's better. This does not allow the employer to keep the money though. Whatever the employer receives, the full $1,500, the minimum at least $1,500 must be paid to the employee. So this is not about propping up the business with extra money. This is about making sure that you stay engaged with your staff members. The payment that goes to the employer and then goes to the employee is taxable income to the employee. So just like wages. Now you may have situations where you have a staff member that works with you and they only earn $1,000 a fortnight, but your business did drop by the eligible amount and you've checked out that you're eligible. You are going to get $1,500 into your business, but your worker was only earning $1,100. That extra $400 you must pay to your employee. They must receive that amount of money. So you can't keep it at all. You must pass it all the way through to the staff member. And that's called a top-up. That's the top-up. This JobKeeper can also be applied for by contractors or self-employed people as long as you pass the turnover reduction test. Now, many of you and many of the people who are listening to this presentation, their first payments were made on the 7th of May. Originally, we were told everybody gets paid on the 7th of May, but because of the volume, the tax office released a media release on the 8th of May saying that the process has commenced and they will be paying over the next 14 days. So we still have clients waiting for this JobKeeper right now. They're still coming. There is a form to be filled out, and that form needs to be signed by the employer and the employee. I mentioned Job Seeker before. You can't get Job Seeker and JobKeeper. If you're getting Job Seeker or you applied and got registered for that, and your employer says you can get JobKeeper, then you apply for JobKeeper, cancel Job Seeker, may have to pay some of that Job Seeker back, but you will get a lump sum for JobKeeper. You'll be much better off. So the JobKeeper payments for businesses, to be eligible, your turnover must have dropped by 30% on a comparable period to 2019. Now, that means you can compare March 2019 to March 2020 or April 2019 to April 2020. And if you haven't qualified so far, you keep checking those turnover comparisons. You might qualify in May, you might qualify in June. Let's say you qualify in June. What will happen then is you will get your June JobKeeper paid to you, to the employer by the government, and you will continue to be eligible for June, July, August, and September. You don't have to re-qualify every month, because your turnover might drop by 30% one month and immediately you're eligible, and you stay eligible until September. Doesn't matter if your turnover spikes or goes up through the roof. The conditions were that the worker was employed on the 1st of March, 1st of May, yes, 1st of March, that's correct. And if you employ casuals, that casual must have been employed for at least 12 months. And that's a bit of a kick in the guts for those in the hospitality industry, because that industry hit the hardest, being cafes and restaurants being closed. That industry is built on casuals, which tend to be transient, tend to move from one employer to another. And unless you've been with the one employer for more than 12 months, you miss out on it. It doesn't mean that you get nothing. It means that you are forced to apply for JobSeeker. For individuals, you receive the $1,500 per fortnight. I've already mentioned that. It is treated as taxable income. I've mentioned that. And if an employer normally pays you $2,000, then they'll be getting $1,500 from you, from the government. So you're still getting $2,000. They'll pay super on the whole $2,000. But my example before, if the staff member normally got $1,000 and you're topping up to $1,500, you don't have to pay the super on that extra $1,500. That is optional. If you want to pay the super on the extra $500, that extra $500, you can, but you don't have to. Next slide, Kat. The process. So the first check limit or step is to check that your turnover is down 30%. If it's not down 30%, you're not eligible. You can check this on your software, assuming you've got computer software. If you don't have computer software, list out on a little spreadsheet somewhere your turnover. I've had emails this morning from 2 different sole traders. They're not using software. They list out every month's turnover since March last year. I'll do the little analysis to see whether they're going to be eligible. Now, when you do the turnover eligibility criteria, you can choose whether it's the cash basis, which means money banked into your bank account, or it can be the accruals basis, which means the invoices issued to your customers. You get to choose which one you want to use. You get to choose which month that suits you, and it's whatever's going to be better for you. So that's step one. Step two, you must notify the staff who are going to receive JobKeeper, and there's a form that must be filled out and signed by both of you. You need to retain that as the employer for 5 years. You don't need to send it to the tax office, and we strongly suggest that you send it to us or your accountant so that we have a copy on file, because I suspect when we come out the other end, at some point, maybe it could be 2 or 3 years down the track, the tax office could do just a blanket sweep to everybody who got JobKeeper and say, we would like to see that employee notification form. And if you don't have it, there is a possibility they could ask you to repay the JobKeeper, and that could break your business down the track. The third step in this registration process is that you register on who is going to receive your JobKeeper, and you can do that on your software. I've mentioned two there, 2 packages, Xero and Payroll, MyOb. I'm going to go into those packages with a little bit more detail in a moment. For those that don't use those packages, your eyes will glaze over for about a minute and a half while I just cover off on those. But thank you. That process is one, but you must also register those staff on your MyGov business portal or on the HO portal, so it all matches the software. And if you're not sure or don't have a MyGov business portal, get your accountant to do this. It's an important step, and it's a lot of money to be at risk to get it wrong, when the accountant will probably charge fairly little amount. You know, I think between 200 and 500 is what we're seeing to do this process. Then I think you should do it. Very important. So I'm just going to jump into Xero, and I know some people, not everybody uses Xero. We are accredited with Xero, MyOb, QuickBooks, Cashflow Manager. An accounting firm our size needs to be accredited with all of them. I think Xero is number 1 out there by a fair bit. If you're on Xero and you haven't worked it out, you go to Payroll, you go to Pay Employees, you go to the tab that says payroll support during COVID-19, getting ready. You click on the eligibility. It will automatically tell you if you're eligible for your turnover. It allows little tick boxes between cash and accruals, little tick boxes between months. It is super easy, super awesome. When you enroll your employees, there's a whole list of options there. You just go down the list starting at the top. You select your employee, you click on the button that says Start JobKeeper, you select your first date of eligibility, and you save it for reporting. The start date's locked in. You'll then go off to the ATO portal and you'll make sure that that matches, and you'll click on the same staff member will come up once you click it. It'll actually already know if you've been lodging payroll with single touch payroll. So really, really easy. If you're not sure or you can't follow those steps that I've outlined, and you will have a copy or may already have a copy of these slides, go to your accountant who will walk you through. If you're on MyOb, MyOb's a little tiny bit more clunkier, but they've still got some good systems in place. You do register your staff on the business portal as you do with Xero. You do have to create a new income account to receive the JobKeeper payments from the ATO. So you do that manually yourself in your chart of accounts. You do have to go into pay items, and you need to add a pay item that says JobKeeper Start. Now you must use exactly the wording I've got there. Don't put an extra space in or misspell it, because it won't work. When you are paying somebody JobKeeper for the first time, you use that pay item, you pay them 1 cent in the pay run. Don't panic that they'll get paid 1 cent. That gets rolled into the tax amount, so they won't get paid 1 cent, but that is a code that tells the tax office you are paying JobKeeper, because the tax office are monitoring who the employers are that are getting JobKeeper and making sure that they're being paid through to the employee. So if you have to top up, using the example I used before, your staff member normally gets $1,000 a fortnight, you need to pay them $1,500. That $500 will be allocated to JobKeeper Top Up, and you need to add that pay item spelled exactly as I've written there on the slides. And that's if you get it wrong, the tax officer won't know that you're actually paying them. And for those that are getting more than $1,500, you just pay them as normal. Tax office can see they're getting at least the $1,500. So with JobKeeper, you can also have an eligible participants nomination form that relates to partnerships, where you might have nobody on wages, or you might not be paying yourself a wage because you take a partnership distribution, or a company you might be taking a dividend, or as a trust you personally might be taking a not a dividend but a distribution. So we can go online and we can register one partner or one director or one adult beneficiary who's going to receive JobKeeper, assuming that your business has dropped 30%. And sole traders, there's no form to fill out for sole traders, but you can do that yourself on the MyGov account. I actually don't recommend that. I suggest that you go to an accountant and have them do it on the ATO portal. Again, tick the wrong box, say the wrong thing, haven't checked your eligibility with turnover, and you're paying it all back in 1 year, 2 years, 5 years. It could hurt a lot. Get the accountant to do it for the sake of a couple of $100. I know we are not even, if you're not eligible, we check it and we're not even charging if you're not eligible. So at least do that because it's worthwhile. And I know the form for JobKeeper eligible participations nomination form, I know that's a mouthful, and it's available at the tax office. The tax office have a huge database. If you're looking for a shortcut, go to the rjsanderson.com.au website, click on the box that says Knowledge Centre, click on the box that says Fact Sheets, and you will find that form under our Fact Sheets section, with a number of other forms that you might need over the process of some of these grants. Land tax, Victorian Government. This is a deferral of land tax for 2020. It is for individuals. You must have at least one non-residential property to be eligible, and your land holdings need to be under $1 million. So it doesn't apply to everybody. If you've got 2 rental properties, you might be borderline, depending on the value of the land. Are you over 1 million or aren't you? You've got 3 rental properties, chances are you're not eligible. This is not a waiver. This is delaying or deferring when you pay your land tax. Thanks, Kat. Access to super. 10,000 before super, 10,000 before 30th of June, 10,000 after. It ceases on the 24th of the 9th. You must be on Centrelink benefits or a sole trader with a turnover reduction of 20%. That's not a typo. Everything we've been reading is 30%. This regulation is 20%. I'm not quite sure why. Or you might be on wages and you're working 5 days a week and your employer says, we're cutting you down to 4 days a week. Your hours have dropped by 20%. You can apply for this. The only way to apply is on the MyGov account. There's been, I can't apply as your tax agent. The accountant can't do it. There's been a lot of talk in the industry about if you're a youngish person, you take out $10,000, that could cost you $30,000 by the time you are due to retire. True, that's true if the super continues to increase, but you need to think about whether you need the cash today rather than the cash for tomorrow, because you don't know what the state is going to, what you're going to be like at retirement, or if you reach retirement. So if you need it today, get it today. I've had a number of clients get it, husband and wife renting a house, both eligible, they've both claimed $20,000 before 30th of June, $20,000 after. There's $40,000. That's making up the balance of a deposit they've been saving for. They will use that money to move out of the rental market and buy a house as house prices are predicted to decrease. Fantastic strategy. So this is not specific to anybody. Get advice before you make any changes to super, but yeah, there are good reasons. If you need it, get it out. Thanks, Kat. Their commercial tenancies, there's a 6-month moratorium on evictions and rental increases if the business that's renting has a 30% reduction in turnover and if they're not a $50 million business of any sort. So no rent increases and no evictions as well. The theory is that the rent can be reduced, waived or deferred in proportionate to your turnover reduction. So if you've dropped by 50%, the argument is you go to the landlord and you ask for a deferral or waiver of 50%. If you're the landlord, you want to defer it so you get the money later. If you're a tenant, you want to get it waived so you never have to pay them the money. The state government have set up a new system for mediation. It's a smoother system. It's meant to be quick relief. If you do go through and give your tenant, as a landlord, if you give your tenant rent relief, you can receive tax relief, land tax relief, 25% on the condition that your tenant's getting JobKeeper and that they're 50 million or less in turnover. And I think that's an important thing to make sure you're getting that from your tenant. There must be an agreement, and that agreement gets sent to Consumer Affairs Victoria. What that all tells me is that you would definitely use a real estate agent so he can hold your hand, he or she can hold your hand as you go through that process. Thanks, Kat. Residential rent relief. The state government announced a one-off grant of up to $2,000 if there's hardship, but it's not paid to the tenant, it's paid directly to the landlord. The process is that you contact the landlord or the property manager and you negotiate a new arrangement, including a deferral or a rent waiver to ensure this is in writing. Again, there's a mediation process and it needs to be lodged with Consumer Affairs Victoria. But the next slide is about eligibility. And as you'll see, to be eligible, it's a bit harsh. The tenant can only have up to $5,000 in the bank as savings, and their rent has to be at least 30% of the income level that they earn, and the household income must be less than $1,903 per week. So it's really limited tenants, probably those that are living, week to week, and those that have a really high proportion of income going towards rent. I mentioned that it's $2,000. It is a grant. It's not a loan. It's not a deferral. You keep the money. It goes to the landlord, and it allows the tenant to to have $2,000 worth of reduced rent paid. Early childhood and education childcare relief package. I'll just point out that this was from the 6th of April. Anybody with children in childcare as at the 2nd of March should already have this happening. It relates to working parents. There was priority for those and vulnerable or disadvantaged and parents with pre-existing enrolments. If you're not already getting childcare relief, because it's now free, speak to your centre, because that should have happened. And if you've paid money back to the 6th of April, then you'll get that money refunded. Thanks, Kat. Now, this is one I'm hoping many of you didn't know about. I'm hoping this is the one you looked at and went, what on earth is that? NBN have waived the fees for internet to allow people who are disadvantaged, or people, actually not, I won't use the word disadvantaged, it actually applies to normal mums and dads. If you've got getting part A and B. Part A and B means you've got one spouse at home and one spouse at work. You do have income limits to get A and B. They're up around the 110, 115,000. But what it does mean is you could have free internet. And if you haven't been connected for NBN, you will get absolute priority if you have a child that's got to be homeschooled or trying to get internet so they can do schooling. And that free internet is for 6 months. The kicker here is it's an opt-in system, which means if you didn't know about it, you haven't opted in, you didn't get it. You don't get it. So I would be, if you're in that category, I would be contacting your internet provider, and that might be Telstra or Optus, whoever it is, and say, I've spoken to Roy Sanderson and he says I should be getting free internet because I fit the tax benefits category in parts A and B. And if you're eligible, you'll get free internet for 6 months. There was some superannuation stimulus payments for those that are retired. The deeming rate, deeming means it doesn't matter what you're earning in interest. We're going to deem or declare that you earn 2.25%. That has been cut. That should have been cut years ago. That's my message to the government. I can't believe they kept that at 2.25%. And the minimum that you must draw down from super has been cut in half, which I think is a good thing. And anybody who was a retiree will have got one payment of $750 on or about the 31st of March. You have another one coming of $750 on or about the 13th of July. I have put Lisa Pendula's email address. She's one of our wealth managers. If you think you would like some help to maximise the benefits on what you've got in super or what you are taking out of super, there's no charge for the first appointment. See whether Lisa can help you. Email her, and she'll give you some good guidance. Hopefully, I'll put you in touch with the right people. City of Whittlesea, who have hosted us today, made all this possible. I'd like to thank them. I have jumped on their website, had a little bit to do because we have offices in the City of Whittlesea with 10 around Melbourne. And I've got to say, very, very impressive. The fact that they've created a webinar series of not just this topic, but some other fantastic topics and getting some great numbers attending. They also have a small business mentoring service, which is a great innovation, a business development program, a business list for hospitality, food and hospitality, which I think is fantastic, and a COVID-19 hardship policy. So if you're really struggling and you want some relief in relation to their rates, etc., at least contact them to see what they can do. If you're a business and you think things are tough, and I'm in the City of Whittlesea, then consider their business development program or small business mentoring service. They are outstanding programs. So congratulate the City of Whittlesea for allowing us to host this, and the other various webinars that they're putting out have been terrific. I did go a little bit over time. I was planning to speak for about 30 minutes. I spoke for 39 minutes. I'm happy to take questions. And Kat, if I can call you back.
I'm here.
We can take a couple of questions, I think.
Yep, we've got a couple, so I'll throw them at you, Roy. We've got one saying you have a boost 1 as March and June as 10K each, then boost 2 as June and September as 5K each. Which is it?
It's all of it. Lisa, it's actually all of it. So what's happened is the minimum that you got in March was $10,000. In June, you'll get $5,000, and in September, you'll get $5,000. So the total, if you're getting just the minimum, adds to $20,000. 10 in March, 5 in June, 5 in September. I get it, the slide is a little confusing. And it's a little confusing because the government made an announcement. And when they made the announcement, it was, this is going to be the boost payment. And it was $10,000. And industry hit the government up and said, you guys have not gone hard enough. So they then turned around and said, okay, we're going to have another, we'll call it stimulus boost number 2. This is another one we're going to do that will affect June and September. That's why it's split into the way it is.
Thank you, Roy. Got another question. Is it a good idea to save signed employee arrangement re JobKeeper on Xero itself?
Yes, Xero is one of the better packages out there, and there's an ability to save a document within Xero. I would save it into Xero definitely because it's there as a permanent record. As long as you're using Xero, it will be there, and you can access it very, very easily if the tax office were to ask you.
And another question, I just wanted to confirm superannuation obligations on JobKeeper. Do you have to pay it on the full amount or no?
Yep. So if your staff member was earning less than $1,500, let's say they were earning $1,000 every fortnight, but now you have to pay them $1,500 because of JobKeeper, you only have to pay super on the $1,000. That extra $500 is optional. You don't have to pay super on it, but you can. However, if your staff member was earning $2,000 per fortnight, although you're getting JobKeeper of $1,500 to help compensate the business, you still have to pay super on the whole $2,000 because they were earning more than that figure. Hope that helps.
Perfect. Thank you, Roy. Just another one in relation to the cash flow. So obviously employers are getting refunded pay-as-you-go withholding component of the wage. Will that affect the individual's tax return at all, or is that just kind of an offset for the employer?
This is the cash boost we're talking about?
Yes. Yeah.
So the cash boost payment, no, it's not taxable income.
Yep. Yep. So sorry. The question was that. So say for example, you get the 10K back, and that 1,000 of that is attributable to my income. As the employee, do I get to claim $1,000 less as pay-as-you-go withholding in my tax return, or does that not affect me?
No, very good question. That doesn't affect it. So really what we're saying is your pay-as-you-go withholding component wasn't paid to the tax office because the tax office waived it. How does that affect the staff member? It doesn't affect them at all. They get the credit for the full amount.
Awesome. Thank you for clearing that up, Roy. We have also had experiences, Roy, where we've seen people getting refunded the cash flow boost, obviously, but also some scenarios where it's actually just been offset against the ATO debt. That wasn't what the ATO was saying, but that's sometimes what's been happening. Have you experienced that yourself at all?
Yeah, we have. We've had some situations where they kept it for the debt, and they've had some situations where it was refunded. Now, I believe that the difference was if it was lodged before the 28th of April, which was your due date, anything lodged 28th of April was going to be offset against debts unless you applied for it to be paid.
Yeah, awesome.
Anything lodged after the 28th of April, because accountants get until the 26th of May, so 28th of April to the 26th of May, they were not going to be offset against debts. They were going to be refunded without the needing to apply. So if you're in a situation where they offset it against the debt, you can contact the tax office and say, I need that money. And my understanding is that they will actually then refund that money.
Perfect. Thank you, Roy. A couple of other questions, and I think that is it. So in relation to the government-backed loans, do you have to jump through all the necessary hoops that you would usually have to jump through when you're applying for a loan, or are they a little bit easier when they're government-backed?
Yeah, I'm going to say they're a little bit easier, but when you say jump through hoops, the fact is you still have to supply details of your income, the profit and loss, your identification. It's a normal loan process. I think And that's a fair bit of paperwork to supply the bank because they have to go through their due diligence. I think what is different is behind the scenes where they might have said no previously, then they've got a better criteria to say yes now. So you've still got to supply all the documentation.
Thanks, Roy. And the last one, I believe, is there any scenario with if you receive JobKeeper payments, is there any scenario where you'd have to pay it back?
Yeah, there are. And this is where advice from an accountant's an important thing. If you have said that your turnover is dropped by 30%, then the employer runs the risk if it didn't drop by 30%, or they did some dodgies and just didn't send out invoices for a whole month and took actions within the business to make sure it dropped by 30%, then the employer would actually have to pay that JobKeeper back if the tax office could prove that. The staff member is not affected at all. A staff member might have to pay it back if they attempted to get JobKeeper from two companies, because you can't do that, or JobKeeper and JobSeeker at the same time. You can't do that. It's one or the other. But there is a potential for an employer to have to pay it back if they have got their turnover calculations wrong or taken deliberate action to make sure they got the money.
Perfect. Thanks for that, Roy. That's all the questions we have submitted today. So thank you for running us through that, Roy.
Terrific. Thanks, Kat, for assisting us. And to everybody who's listening, we're very happy with the numbers we got. It's terrific. Great topics. And you'll get a copy of the slides if it hasn't been issued already. There's contact numbers for our officers. Feel free to email me personally as well, roy@rjsanderson.com.au, or the info line. So have a great day. Thanks, Kat. You have a good day too.
Perfect. Thank you, Roy. I'll talk to you all soon.
Thanks, everybody.
Thanks.